Well, welcome to the year of the investor. It's not what you think. We are familiar with investors making what are seen as lowball offers. But that's not what an investor does. That might be what a wholesaler does. But an investor is looking for value, uncompromised value, unparalleled value, or maybe simply to make money over time in some investment vehicle. In real estate, for the last 100, 200 years, it's been the number one way to grow your wealth. It's outpaced the stock market historically. And with stock markets relatively overheated and uncertain at this time, and with the economy such that it is, quarterly reports and profits are all over the board right now. And there is some concern on Wall Street about where some of the economic indicators are heading. I don't have the ability to forecast where the stock market is going up or down. I would just say that it's uncertain. And if we looked at an investor who's been using the stock market extremely well over the last 2, 5, 10 years, it's been a good place to invest and make money. So is real estate for that matter. But with each of the markets changing, and in a time where we may or may not be in a recession, certainly with inflation, investors are looking for the right answer, the next step, the next thing to invest their money in, to use the vehicle for wealth building over time. And the trend that I've been noticing for the last 6 to 12 months is that more people are taking the profits from the stock markets, taking those equity pieces, and moving them more and more into real estate. And I have a suspicion why they're doing it. Let's suppose that there's a portfolio, and let's just call it $1 million. It could be $100,000, but $1 million is probably a more relatable number for real estate investment. Now, let's suppose you got $1 million in the stock market, and the market is off 10%. Well, you're down to 900. Uneasy. If it's going down, there's likely less profits, which means there's less dividends. So if you went in with $1 million and you were down to 900, if you weren't selling, it's okay, but your money was going in reverse. If you had to cash out, you'd have to accept a $100,000 loss, minus fees and commissions, in order to take that money out. And maybe that helps you someplace tax-wise, and maybe that's a good hedge. But as far as moving the ball forward in the investment piece, what if that same $1 million was invested in real estate? Now, stay with me. You're saying, okay, well, what if the real estate market is all at the same 10%? That's like, what? So you got the same 900. And again, it only matters, the only price that matters in real estate or investing in equities is the day you buy it and the day you sell it. Except there's a difference within this piece. In the equities and stock market, you invest $1 million, it goes down to 900. There's no dividend. It's unlikely, or it's small, because there's no profits. Otherwise, it wouldn't go down, right? But in the real estate piece, it's a little bit different. Let's suppose that same $1 million goes down to 900. And I'm not predicting either is going down 10%. But for the purpose of math in the air, an example, if you bought an investment property, or several, what if we saw an investor buy 4 properties at $250,000 with that $1 million? And they all went down to 225, and the net was 900. Same numbers. The differentiator is they're not waiting around for a dividend because they have this thing called rent coming in. And let's suppose for round numbers, the rent coming in is $2,000. Maybe it's $1,800. Let's just use $2,000 for a minute. So now we got $8,000 a month coming in rent. And even if they're using a property management company, probably safe to say there's about $7,000 left over. I think you just did the math right in your head. pretty conservative number, $7,000 in profit on a monthly basis, $84,000. And if you net out some taxes and insurance and things that you would pay in property management, probably 50, 60, maybe 65,000 in profit left over. And this is how the investor thinks. If I got $1 million in the equity market, stocks, bonds, this, that, everything else, and I have $1 million in a real estate market, if they both go down, the differentiator is dividends are going to be nowhere near what the rents would be on those properties. And that's where the profit comes in. So we see more people that are purchasing real estate by removing money from the equity account in their stocks and bonds and portfolio and transfer it into real estate. And that savvy investor making that move is not someone making a $100,000 offer on a $250,000 property. They're looking at $250,000 properties, and they're studying what the net return is going to be. And they're using that rent with solid agents that understand the fundamentals of investment properties and strategies. And they're studying what the net rent is going to be on that property. And then they're going to use that formula to make a good decision, a great decision on which property to buy. You see, the good investment doesn't necessarily have to be that I got the property that was listed at $250 for $150. It could be I got the property that was listed at $250 for somewhere between $225 and $245. That's making me money every month. Maybe limiting the renovations if you want a turnkey property, or providing some value to go in with your crew to renovate a property and then increase the rent. So that's the strategy that is happening and unfolding right now. So for me, this is the year of the real estate investor. It's moving money from one vehicle to another in this way. And I want to take some time to talk about that today, because I don't know that it's getting talked about enough. And I suspect that over time that the agents that have spent very little time working with investors just says, oh, they're all just lowballers. See, it isn't that. Well, it isn't always that. And knowing the difference between a real estate investor, a home flipper, and a wholesale makes all the difference in the world. So if you're on the agent side of this and you're lumping all of your investors into the same category, you may have it wrong. And going a little bit deeper into those conversations will create some better relationships. So if you're a struggling agent, maybe take a second look at this. But if you're a real estate investor with a wealth building strategy, you very well would benefit from being aligned with a like-minded agent or broker that understands these principles. Money's is always moving the market. And this is the strategy that we see, in the year ahead. How about the next couple of years ahead? It'll be a robust market for a savvy investor aligned with the right people. And I think we would just want to go through that. Now, with regard to pricing, interesting strategy, interesting conversation. The narrative is that home prices are coming down. We've seen that median prices are actually up on 1.5% year over year. And we've seen that the proverbial bottom of the market very likely was the end of October, early November in 22. There's indicators telling us that. Solid economic indicators telling that. So what is the illusion of prices coming down? With inventory that everybody knows is low. And some people getting, you get your air quotes out, deals. I don't think it's what you think. Yeah, I was recently participating in a deal as an agent, not a buyer in this one. Maybe I should have been. Property originally was listed over $600,000. Went under contract $500,000, and then there was some unknown repairs that brought the property, into the 470s. Now, how did somebody get $150,000 off the property? Well, the repairs are neutral because it was either the owner was going to pay for the buyer. So let's just compare, $625,000 to $500,000. What changed with that? It wasn't a massive price reduction. although there was a price reduction involved. So stay with me on this. The home priced well into the 600s was way above where the market was at that time. And if you look at the month-over-month increases in price for the last, 10 years, it was still outpacing the price increases by a lot. So, in essence, it was just way overpriced. And when it came down to $5.99 and then eventually like $5.50, it was still overpriced by 10%. But at least it was in range. And that's when it went under contract at $500. So did the buyer get $100 and some $1,000 out the property? Well, off the list price, sure, but it was never the market price, and it was never the value of the house. And we're seeing a lot of examples of the list to sell ratio getting a little weird right now. Because if you look at the list price when it goes under contract, $550 to $500, let's say, you're within 10%. Okay, 90% list to sell ratio. But if you look back to the original of 6.25 and then $500, well, now the list to sell ratio about 80%, up by 20%. I think most investors would be excited to have 20% margin on everything. So the illusion of prices coming down is built upon a foundation of properties that were way overpriced in many cases, not every case, but many, many cases. It's interesting to hear I got a great deal. Well, the buyer thinks they got a great deal. The seller thinks they got a great deal. That's every sale in real estate. Same in the stock market. You're buying a stock because you think it's going up from a person who thinks it's going down. You're both right and you're both wrong. It remains to be seen which. But this is the other side of the coin. Over the last 3 years, there was plenty of boasting about, I listed a property and I got $100,000 more than the listing price. I'm a skilled agent, was the narrative. And I'm thinking, shit, how skilled are you? And so, this probably a few people the wrong way here. But if you priced at $400 and it sold for $500, are you a really skilled sales agent and a great agent? Or were you just about the worst pricing agent on the planet because you told somebody to list it at $400, went for $500? See, to me, that's really bad market analysis. Why would I price my home at $400 but to sell for $500? So for anybody who was putting out billboards, we got $100,000 more than the listing price and 22 offers. So like, well, shoot, if it was underpriced by $100,000, there should be a line around the block for that property. You see, the skill of the agent always matters. And if you're getting $100,000 more than you list the property for, I'm going to suggest it wasn't just market pressures pushing the price up. It was really bad pricing strategies. And now we're on the other side of that. We're seeing properties that were way overpriced and overly optimistic that are selling for a whole lot less. So when prices are coming down in the mind of the consumer, it isn't always what you think it is. And that's the big piece going forward. So as we continue to talk about pricing strategies and marketing strategies, I think what you'll find is a lot more agents are starting to should do a market analysis. And what would it look like if you're selling a home and an agent came in your house? They would give you a market report, right? And it show what sales are looking like recently in your neighborhood so you can appropriately price the property. I know what we're training on the buying side to do the same analysis before the offer goes in to make sure that we're taking into account recent fluctuations in the market so that we're actually offering the right price for the property. And I think you're going to see this ongoing. This is a subject that I can probably go on for hours. I'm probably going to relieve all of you right now, let you get back to your day. But here's what I know. I'm going to keep talking about this because it's real. And this is what's going on with the market. Whether it's an investor or a consumer buying or selling a home, the skill of the agent matters. And the way that we're looking at the numbers is a little complicated in the media. So I'm going to give you what I believe is the real information, the real thing that you need to move forward as you continue to invest and purchase in the real estate market. This is Ron Wojciechowski for the Black Hole of Real Estate.